Hello everyone, welcome back to Trading Edge. So today is another video on price action and volume analysis series. So today we will analyze ICICI Bank chart on 15 minutes time frame. So first of all, we will analyze the price action and its subsequent volume activity, and then we will look for potential low risk high reward trading setups which we could have traded on this particular chart at this particular time frame. Okay, so before we start, to hit the like button and also subscribe to my channel to never miss any update. So as you can see, ICICI Bank is in a consolidation phase for 4 days. Okay, now we will see what is happening inside the consolidation phase. So every time buyers are trying to push the prices towards the upside, they are not being able to break through this level and continue the upward momentum. Okay, so this is an indication that in this particular trading range, prices are continuously forming lower high formation. So this is an indication that supply is overcoming demand very aggressively, and that's why buyers are not being able to continue the upward momentum. Okay, now also see the selling legs have higher volume. So what is this indicating? All this is indicating that sellers are in control over the buyers. Demand is getting weaker and weaker inside this consolidation phase, and supply is very much stronger. That's why see here what happened. After gap up opening, prices couldn't break this level and continue the upward momentum. Okay, see from here buyers push the prices towards the upside after gap down. So this is very important. So even after gap down, sellers couldn't continue the downside momentum. Again buyers defended this level and pushed the prices towards the upside. Okay, but look at the volumes are coming down when the prices are going up. So this is an indication that buyers are losing momentum. Okay, again what happened? Again prices opened gap down here and directly opened into the support zone. Again buyers defended this level and making a double bottom setup. There is also a bullish engulfing setup. Then prices pushed up towards the upside. So every time when sellers are pushing prices towards this zone, buyers are defending this level and pushing the prices towards the upside. Okay, we could see that. Now what is this happening? Even after pushing the prices towards the upside, what is the buyers accomplishing? See, lower high. From here to here, prices are continuously making lower highs, even though buyers are defending this level. Okay, buyers are defending this level, but every time buyers are pushing the prices towards the upside, it is not being able to break the last swing high and push the prices towards the upside. So this is an indication that although buyers are trying, but still sellers are very much dominant. That's why buyers, even after defending this level, they are not being able to break through this level and continue the upside momentum. Okay, so this is an indication. This is an indication that sellers are very much strong than the buying side. Supply is overcoming demand very aggressively, and also the buying legs have lower volume. Okay, buying legs have lower volume. So this is also an indication that supply is dominant. Now see here, after this strong supply with an increase in volume, all the selling got absorbed with this gap up and this candle. Now buyers had the greatest opportunity to break this level and continue the upside momentum. Okay, all the selling pressure here got absorbed, so now buyers had the best opportunity because these levels were already tested multiple times. So gap up is indicating that there is supply demand imbalance and demand is overcoming supply. Now buyers had the greatest opportunity to break this level and continue the upward momentum. But what happened? Again it took resistance from this level and again sold off towards the downside. Again buyers tried, again sellers pushed the prices aggressively towards the downside. So eventually after this gap down, after defending from here, buyers gave up and with increase in volume, prices broke this level and pushed towards the downside. Okay, so I hope you got some important points up till now. Now what happened? Look at 1 and 2. After this strong selling, there is a pullback, but in this pullback phase there is a price and volume divergence that is happening. Remember, we came out of a fairly long consolidation phase of 4 days. Now we broke this important support zone with increase in volume and prices push towards the downside. Now this is the first pullback. So always remember, after a strong selling momentum, the first pullback is a very good trading opportunity. Okay, so here what happened? Here we see volumes have increased but the spreads have remained the same. Okay, so there is a price and volume divergence happening at 1 and 2. See, with this much volume, prices have moved from here to here. Now with double the volume, nearly double the volume than 1, prices have moved from only here to here. So the spread has remained the same at 1 and 2, but the volumes have certainly increased. So this is indication that there are hidden sellers present at 2. This is hidden selling pressure that is happening at 2. That's why we are seeing increase in volume. And again, immediately the next candle, prices rejected this candle and sold off towards the downside and closed around the low of the candle. So this is an indication that this was a two bar reversal setup. High volume buying candle got rejected immediately in the next candle. Where it is happening? Very important structural zone. This is very important. Okay, now again prices sold off towards the downside with an increase in volume. Again buyers tried, again sellers pushed the prices towards the downside with an increase in volume. Now volumes have dried out and the prices are also losing steam towards the downside, and it is in a consolidation phase. Okay, so after this fizzling out of the selling momentum, again buyers tried. Now see, again volumes have increased, but what happened? Immediately this buying leg got rejected by this increase in volume candle. See, this candle is very important. Huge surge in volume and prices closed around the low of the candle, and there is also a wick towards the upside showing rejection of the higher prices. Remember, we are in a downtrend. Do remember that we are in a downtrend. Okay, now from here it took a pullback, sold off aggressively, again pullback, sold off aggressively, again pullback with an increase in volume, but again sold off aggressively with a pop in volume. So this is all indicating that supply is very strong than the demand at this junctures. Okay, now after that prices eventually broke this level with an increase in volume. Okay, but what is happening here? Prices are going towards the downside, but there is a huge surge in volume. Okay, remember we are in a strong and established downtrend, but this type of volume is coming after a considerable trend has already passed. So this volume could be a sign of a potential exhaustion move. Okay, so this type of volume is coming after a strong and long established downtrend. So see bars X, Y and Z and look at the volumes. With this much of volume at X, there is a doji formation. Okay, so what is this indicating? Compare this volume with this volume. With this much volume, prices have formed a inverted hammer. So buyers are coming at this price areas. That's why we are seeing a surge in volume, but we are seeing certain activity of the buying side. Inverted hammer formation means buyers have pushed the prices towards the upside, but again sellers push the prices and closed around the low of the candle. So this is an indication that buyers are coming in the markets, although the selling pressure is strong. There is no doubt about that, the selling pressure is strong, but these are signs or the footprints that buyers are coming in the markets. Then candle Y, increase in volume and prices closed around the low of the day. So we could say that low of the candle, sorry. So we could say that yes, this candle has all the selling pressure. But remember, we are in a strong downtrend. And this leg is kind of a parabolic shape. Okay, this leg is kind of a parabolic shape kind of price behavior. So this leg could be a sign of potential exhaustion move in the markets. Okay, so the volume at Y with the spread, we could say that yes, that it is a good selling candle, but these are not professionals who are selling at this price areas. This could be all retailers. Why? Because now they will enter after seeing such a very strong and established downtrend. So this also could be a sign of a potential exhaustion move. Okay, and then huge volume, but what is the candle? Kind of a doji candle. So if we are short from here, or from here, after seeing this kind of move and huge volume surge and price and volume divergence, we should definitely exit our trade. Okay, now what happened? Again prices push towards the upside, but the volumes are not that great. Okay, now after this buying leg, the sellers here, they again defended this level and tried to push the prices towards the downside. But what happened? Prices started to form higher low formation. So this is an indication that after the strong selling pressure, there is no follow through selling towards the downside. So what is this indicating? If the sellers were very much strong, then after this retracement leg, prices should have continued the downward momentum. But what is happening is, after this buying leg, there is less selling pressure. The volumes are also going down and prices forming higher low formation. Again, see, again buyers push the prices towards the upside but forming lower high. Again sellers tried to push the prices towards the downside at P and Q, but what happened? What happened at P and Q? At Q, volumes have increased considerably from P, almost double the size of P, but the spread has remained almost the same. So if this was all selling pressure with a pop in volume, then prices should have broken this level and continue the downward momentum. But what happened? Now compare the selling legs. From here we saw sharp selling momentum with an increase in volume. Then selling pressure reduced, volume came down. But now volumes have increased, but the selling pressure has still not increased and prices are forming continuous higher low formation. And there is also a price and volume divergence that is happening at P and Q. P and Q have almost the same spread, but at P the volume is this much, but at Q the volumes have almost doubled, but the spread has remained the same of P. So this is a clear sign of a hidden buying that is happening at Q. Hidden buying that is happening at Q. That's why prices are not breaking this swing low and continue the downward momentum. Okay, and then eventually what happened? Prices broke above this level, took a pullback and continue the upward momentum. Okay, so I hope you got something very important learning. Now we will look for potential trade setups in this chart. So our first entry could have been around here. Why we will enter here? Because prices are continuously making lower high formation. Buyers are not being able to break through above this resistance and continue the upward momentum, and support level is already tested multiple times, 1 2 3 4. Okay, so that's why even after defending this level from here buyers are not being able to push the prices towards the upside. Okay, and here there is a very important clue that even after gap up with a pop in volume, why did the buyers couldn't break this level and continue the upside momentum? Here buyers had the greatest opportunity to break this level. If they were strong, they are defending from this level, now they had the greatest chance. All this selling pressure got absorbed. Now they should have broken this level and continue the upside momentum, but they failed again. So when prices broke this level with a pop in volume, we should definitely enter here, stop loss here, and continue to ride the downtrend. Again high volume rejection candle formed at resistance zone. This is a clear cut price volume divergence, hidden selling that is happening at 2. So we will enter at the break of this candle, at the break of the low of this candle, stop loss here, and see the huge downside momentum after that. Why we will enter here? Because after this consolidation phase, prices broke down with a pop in volume, then this is the first pullback. So we should definitely enter on the first pullback. This is a very high probability trade setup, and also there is a price and volume divergence that is happening at 1 and 2. Same spread but increase in volume at 2. So when the low of this candle got taken out, we will enter here, stop loss here, and see the huge downside momentum after that. Again we could enter at 3. Why we will enter here? We are in a downtrend. Do remember that. So this is another very important point. We are in a downtrend. Then we see a increase in buying leg, but this buying pressure got rejected by an increase in volume towards the downside and closing at the low of the candle. So this is an indication that all this buying got rejected in one candle, which is an indication that this is a very, very strong supply that is coming in the markets. And where are we? We are at an important structural zone also. So the sellers here defended this level and pushed the prices towards the downside. So that's why we'll definitely enter here, stop loss here, and see the huge downside momentum after that. And we should definitely exit all our selling trades around here. Why? Because there is a huge surge in volume after a strong and established downtrend, and there is also a price and volume divergence that is happening. So this is a sign of a potential exhaustion move that is coming in the markets. So better to exit our sell trades. Okay, why? Because this is a parabolic move, and also volumes have gone berserk. So we could say that after a strong downtrend, if there is a parabolic move with an increase in volume, this could be a sign of a potential exhaustion, and there could be hidden buyers that are coming in the markets at these volumes. So we should definitely exit our trade around here. Then again buyers push the prices towards the upside, again sellers pushed towards the downside from these levels, but there is a clear cut case of demand overcoming supply. Why? Because the selling pressure has gone down. Here we saw sharp selling momentum, but what happened to the volume here? Low volume selling. So this is an indication that sellers are losing momentum in this market. Again there is a price and volume divergence that is happening at P and Q. Volumes have increased from here, from this leg, low volume, but this leg had higher volume, but prices are forming higher low formation. So this is an indication that sellers are losing momentum and there are hidden buyers that are coming at P and Q. That's why prices are forming higher low formation. Then at the breakout with good volume pullback, we should definitely enter here, stop loss here, and see the huge upside momentum after that. Okay, why we should enter here? Why you should enter here? Because all this selling got absorbed by the buyers. Buying pressure has absorbed all the selling pressure. That's why there is a pop in volume in the buying leg and decrease in volume in the retracement leg. So this is an indication that all the selling that is happening here got absorbed by this increase in volume buying. Okay, so you should definitely enter here, stop loss here, and see the huge upside momentum after that. So I hope you got something very, very important learning from this video. If you find it useful, please do like, share and subscribe to my channel, and also do comment down below if you have any queries related to this video. So thanks for watching. See you in the next video. Until then, it's bye from my side. Take care everyone. Bye.